Hey everyone, welcome back to Corporate Decoder, the place where we unwrap the secrets hidden in corporate filings. And today it looks like VSEE Health Incorporated is trying to raise some serious cash in what seems like a pretty standard deal, but we'll see if there is more to it than meets the eye. Alright, so we are looking at a Form 8K filing from VSEE Health Incorporated. Think of an 8K as a company's breaking news report filed with the US Securities and Exchange Commission, or CC for short, whenever something pretty significant happens. This one filed on the 25th of November 2025, mostly details a new agreement the company has entered into. VSEE Health Incorporated, as you can see here, is the company behind this report. They are what is known as an emerging growth company, which means they are a relatively new public company and get to follow some slightly more relaxed rules for a bit. Now, let's talk about what VSEE Health does. They have common stock, which is basically ownership in the company. Trading under the ticker symbol VC, they also have warrants, which you can think of as a coupon that allows the holder to buy shares of the company's stock at a set price. These are trading as VSU. The big news here is an agreement for a private placement, which is basically a sale of securities directly to a select group of investors. Not the general public. VSE Health has agreed to sell a bunch of its common stock, or pre-funded warrants in some cases, along with accompanying warrants to a single institutional and accredited investor. This is for gross proceeds of about $6 million. They're selling these shares and warrants at $0.61 each. Now, here is a key detail about the accompanying warrants. They can only be used or exercised after the company gets approval from its shareholders. This is pretty important because it means the deal isn't fully locked in until the investors give the nod. The company also promises to file a registration statement with the CC to allow these shares and warrants to be resolved later on. They have to file it within 20 days of the deal closing and aim to get it approved within 60 days. There is also a lockup period here for the company. For 90 days after the registration statement is approved, the company can't issue any new stock or similar securities or file any other registration statements. This is pretty standard to prevent the market from being flooded with new shares and to protect the investors who are buying in now. They also have to hold a shareholder meeting to get that approval for the warrants, and if they don't get it, they have to keep calling meetings every 90 days until they do. What's this money for? The company says it's for working capital and general corporate purposes. This is a pretty standard phrase and basically means they're going to use the cash to keep the business running, pay bills, and fund their everyday operations. AGP, or Alliance Global Partners, is acting as the placement agent for this deal. That means they're the middleman helping VSEE Health find these investors and put the deal together. VSEE Health has agreed to pay them a fee of 7% of the money raised plus some expenses. That is a pretty standard fee for this kind of transaction. And here is another important lockup agreement. The company's own executives and directors have also agreed not to sell their shares for a period of time, similar to the restriction on the company itself. This is to ensure that the insiders aren't dumping their stock right after the new shares are issued, which could signal a lack of confidence. This section basically confirms that the shares are being sold without being registered with the SEC first, which is allowed under certain exemptions like Section 4, Add 2 of the Securities Act. This is common for private placements where the buyers are sophisticated investors who can protect their own interests. It also notes that this filing isn't an offer to sell or buy securities, which is standard legal boilerplate. Finally, we have the exhibits. These are the actual legal documents related to the deal, like the form of the warrants, the purchase agreement, and the placement agent agreement. These are the documents that lay out all the nitty-gritty details of the transaction. So, what is the story here? VSEE Health Incorporated is bringing in $6 million through a private placement of stock and warrants. This is pretty standard for companies looking to fund operations. The key things to watch are shareholder approval for the warrants and how quickly they can get that registration statement approved. The lockup agreements for both the company and its insiders are designed to create stability after the offering. Now, looking at the bigger picture for VSEE Health, they are a healthcare technology company, and this type of funding is critical for them to develop new products or expand their reach. The $6 million isn't a massive amount, but for an emerging company, it can make a significant difference. The fact that they need shareholder approval might indicate that the number of shares they are issuing, or the potential dilution to existing shareholders, is a concern for them. Companies usually only go this route if they absolutely need the funding and believe they can get the approval. The tight timelines for filing and getting the registration statement declared effective show a sense of urgency to get these shares out into the public market, which is often to facilitate future liquidity for the investors. A notable risk here is the reliance on shareholder approval. If they don't get it, the deal could fall apart or at the very least be delayed significantly, which could impact their operational plans. Also, The exercise price of the warrants being the same as the purchase price for the shares implies that the warrants are being issued as a sweetener to make the initial share purchase more attractive. This kind of structure is common in private placements. The company's future direction will heavily depend on how effectively they deploy this new capital. VSE Health is strategically raising capital in a typical private placement that requires shareholder nod. The execution of this deal and the subsequent use of funds will be crucial for their growth trajectory. Alright, that is our breakdown of VSE Health Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.